I want to bring in Sallie Krawcheck. She's the co-founder and CEO of Ellevest, and she's also the former CEO of Merrill Lynch. It's good to see you, Sallie. There's a little bit of PTSD going on, though, I imagine, for you and for so many of us who are trying to think through what's happening here. How does this, for you, compare to 2008, and where do you sort of land on this whole big deposit insurance issue? Meaning, how do we prevent these what seem like continual? We haven't had a second run on the bank or a third run on the bank, but that's what everybody's worried about.
Yeah. Andrew, it's funny you say that. First of all, it's great to be here, but with you. I was thinking the same thing before I came in. It's PTSD. It is deja vu all over again. And we've been reminded of a number of things, one of which is that banks, Wall Street firms, are essentially bundles of risk. They are interest rate risk, they're property risk, they're basis risk, they're stock market risk, they're consumer credit risk, they're corporate credit risk, they're mortgage risk, they're information security risk, they're liquidity risk, that are built in the case of banks on top of these deposits, which are critical infrastructure for the United States. On top of the risk that they have, they're leveraged. And so these banks certainly are less leveraged than they were back in 07, 08. But you can drown in the ocean and you can drown in a pond. And if you have, $10 of assets for every dollar of equity, you don't really have to see, the equity get hit too hard before you're in a crisis mode. So we're seeing that right now. And happily, the regulators are incredibly experienced and learned an important lesson of 07, 08, which is you have to move decisively and you have to move very quickly. And we are fortunate that they are doing.
Do you think, though, that they're moving quickly enough? Sallie, do you think they're moving? Do you think they're moving quickly enough? Because there is an argument to be made that you look at a First Republic, they're still sitting out there, unfortunately, blowing in the wind. And I think there's a lot of concern about that. I think some people thought that actually there might be a forced shotgun marriage over the weekend that didn't happen.
Sure. Well, remember, Andrew, how long it played out over 07, 08. Remember, you had Hank Paulson kneeling down and sort of begging Nancy Pelosi, to pass the rules. So, if we're moving in days rather than weeks, I think that's fine. And they put that liquidity facility in there. They've got to figure out where this thing burns itself out, and it will at some point. It's just a matter of, does it burn itself out with First Republic? Is it another bank? Is it another bank? But the regulators are certainly on the case.
Where do you land in the debate about both deposit insurance on one side, meaning does everything have to have insurance across the board? Can the industry withstand that? Do they become just utilities? Can they afford to do it? And then I want to get your thoughts in just a moment on what Jay Powell should do in the next, call it 24, 48 hours.
I'm not, I'm certainly not an expert on what the Fed can do. Certainly we are closer to the end of tightening than we were a week and a half ago by more than a week and a half. And so if the Fed needs to break something before they stop tightening, the Fed has broken something. But look, in terms of what to do for the individual investor, I can tell you the great news at Ellevest, where we are an investing platform built for women, helping women build and manage their wealth. The great news is we're seeing these women really stand firm. And we're seeing them also understand that if you go back to 07, 08, at that point in time, that was a great time to invest. There may have been more downside to it, but most of our women have recurring deposits, so they're averaging into the markets. And this historically, during times like this, have been good times, although with some volatility to get into the market.